Well, I'm joined by Callum Henderson. He's head of Forex strategy at Standard Chartered Bank. So thanks very much for joining us, Callum. So tell me this.
Hello.
We saw the biggest one-day move since 2005 for the yuan against the dollar. How much of a move do we need to see before investors can say, OK, China is very serious about this gradual appreciation? It's not just kind of placating politicians in the U.S.
Well, we've seen a number of important things so far. We've seen the daily fixing being moved sharply lower. We've also seen much greater two-way volatility in terms of the spot price. So both of those are very positive developments. Of course, it may be a question of careful what you ask for in the sense that the Chinese yuan isn't necessarily just going to go up. As you've seen today, it can fall as well. But the overall trend is positive, and the overall trend for the Chinese yuan remains for a stronger currency.
So you don't think depreciation is a major possibility as a trend?
It's a possibility, as indeed the PBOC advisor said on the weekend, if the euro comes under major renewed pressure, but certainly not on a sustained basis. It would be a knee-jerk reaction to what is happening elsewhere in the global markets. But the long-term trend is still for very strong Chinese growth, for capital going into China, and as a result for a stronger, not a weaker currency over the long term.
Well, this is it. We should remember that effectively the yuan has already appreciated about 16% against the euro. How's all that playing into this?
Well, that's a very important point. The Chinese yuan has appreciated significantly on a trade-weighted basis as the euro has fallen, and that may limit the ability or the amount of appreciation that the currency can appreciate against the US dollar. But certainly the bias and the direction remains pretty clear from our point of view. It is going to get stronger against the US dollar, but to a more limited extent, given the amount that it's already strengthened on a trade-weighted basis.
Now, it was interesting, the reaction that we saw in the markets over the past 24 hours as investors try to work out what this means for different companies. We saw retailers, technology companies actually falling in the U.S. Tell us a bit more about the reaction.
Well, the market reaction on Monday initially was very positive. We've seen some degree of consolidation and retracement since then, partly due to the two-way volatility in the Chinese exchange rates, partly due to renewed concerns about the European banking system. Just because China has made its currency more flexible doesn't, of course, mean that that takes away from the problems elsewhere, particularly in Europe at the moment.
Okay, now Robert Mundell, who of course is a Nobel Prize-winning economist, also at Columbia University, he says this. He says it is wrong for the U.S. to force China to destabilize the yuan. He says it's been a great source of stability, and this is also true, that this has put some uncertainty into the marketplace, hasn't it?
Well, it has put some degree of uncertainty into the marketplace. Yes, that's true, but also it has significantly reduced trade tensions between the United States and China, and as a result, the initial market reaction, as we said, has been relatively positive. Could it potentially hurt the Chinese economy? Certainly, if the Chinese yuan appreciates too far, too fast, that will not be good for exporters. But it does represent, at the margin, part of the overall rebalancing of the global economy, which we need to see.
The good outweighs the bad. Okay, Callum Henderson there, head of Forex strategy at Standard Chartered.